clicking, cash out, charts talk, we map the route, numbers dance, we ride the waves, welcome into enlightened trades, enlightened trades, yeah, we learn while we get paid, sharp minds, brighter days, turn the page with enlightened trades.
Today is January 7th, 2026, and we have a buy alert on Cracker Barrel. Cracker Barrel is awesome. There's a buy alert. Now we're going to review the chart today so we can kind of determine where price is going to go, right? So just as a quick refresher, I have what is called the Q model, quarterly model. This is how mostly I trade on long-term investments. I go by the quarter, and I kind of, as we go through there, I'm going to try to do better at just being clear on how my model works. But essentially, what I do is I mark the quarters of the year. So, on this specific stock, I went back to the fourth quarter of 2023, which started on Monday, October 2nd, 2023. And then I mark each quarter, from there. January, April, July, October, January, same thing, right? So I marked all these. And then I go back and I mark the high and the low of each quarter. Now, this kind of will help us determine where we're going to go. And I'll show you just some tricks that I use to help determine those things. Okay, so we'll go back to this quarter. We can actually mark off, which I didn't mark it off real quick, quarter 3 low 2023, which is right here. Okay, so we have a low, we have in quarter 3, low in quarter 4, we never took it out. Okay, go up, we make a high on quarter 4, and then for quarter 2 we make a high and a low. So this quarter was an inside quarter. Technically this one was 2. Then we go to quarter 2 and we make a high, and then we take out essentially these 3 lows, which there's just a lot of liquidity sitting there, right? So the algorithms that play this market, that's what they do. They create liquidity, right? So there's liquidity under this low, liquidity under this low, liquidity under this low, and then it's engineered to then go and take it out. Okay, so once the liquidity has been taken out, we can delete it. Okay, so we still have a high at 83, a high at 82, a high at 73. We have a high here, quarter 2, come down, we made a low, quarter 2. Quarter 3, we take out that low, we make a high, and then we come and we make this low, quarter 3. From this low, then we go up and make a low, take out this high, and we make a low here, make another high, 4. It's kind of interesting, right? So we made a low, took out that low, and then now we're going up. It's a lot of price action here. It's crazy. Made a high, then we make another high, get rid of that. And then once we make this high, where do we go? It's so crazy. We go and we take out this low, we make a new low, go up, and then we take out quarter 2 low, 2025, and the previous quarter 3's low. A lot of price action here. I mean, that in that quarter we went from 65 to 35. We lost half the value in a quarter. And then what do we do? Once we took out this low, in quarter three, 2024, go and we make not a new high, but a new high, but we took out this high. So go, took out that high. It's kind of crazy. Look at that. It was 65 to 35 and then 35. Where do we go? 70. But we have all these highs still here. Technically, we have highs here, here, and here. Quite a few highs here. But once we make a new high here, what do we do? Then we really drain it. Come down and we made a low here. High. This low is taken out. This low has been taken out now. And we made a new low for this quarter. And then as soon as this new quarter starts, we take out that low. And this becomes the new low, quarter one low. Now. And now we're off to the races. We'll see where we're going to go. I don't know. Possibly up here to the 80s. Now, if we go back to the highest high in this tier, I'm gonna show you why I think we're at the bottom. ICT teaches standard deviation, right? So I'm gonna do a fib, standard deviation fib. We're gonna go from the swing high to the swing low here. Okay. I'm going to mark off 2 to 2.5 and 4 to 5. We do it on the way up, we do it on the way down. So, swing high, swing low, 2 to 2.5. Came in here. We didn't really get a retracement. But we did hit the 2 to 2.5, and then the next stop is the 4 to 5. We're here. Typically, once we hit the 4 to 5, we typically will retrace back to the 2.5 at a minimum. So we're here. If this is indeed the low, we can do a standard deviation, swing low, technically to that swing high. So we're going 2.5, 4. So at a minimum, we're going here. Okay. Didn't really, that is a swing, but we might be able to count that. And if that's true, then we're going to 40 to 45, 43, sorry, and 50 to 56. I think that is probably more accurate. I do believe we're going to take out that high. If this is indeed the bottom, and I'm going to show you another reason why I think this is the bottom, then we should not necessarily in this quarter, but possibly the next quarter, we should take out these highs. Just going to show you something real quick. That's okay. The other reason is, okay, I haven't really got into this yet, but I will get into it now. If we went to the monthly, another thing that ICT teaches is fair value gaps, right? So typically, price will retrace into a monthly fair value gap. And we do have a monthly fair value gap here. So it's not perfect, but typically this is a good sign, especially on the monthly time frame, of where price will come back to. Okay, so there's a fair value gap here. And price, let's go back to the daily. Price came right back to the center. the 50% of this fair value gap, this is just a really good buy signal. Also, price now has closed above the 20-day moving average. And we might see some, you know, price action that comes back, retests that 20-day moving average, but then we're off to the races. So this is a buy alert for Cracker Barrel. Okay. Any questions? Hope you're having a wonderful day today. I'll when I I'll keep sending these out every day. So subscribe to my channel and let's make some money this year. Thanks, everybody.
This is enlightened trade.